Hello and welcome. You tune into Your Trades with me, Ankita Saxena, and with me is Snehi Shah. In the next half an hour, we'll take you through how the market's shaped up today and what could be the constructive market come tomorrow morning. Well, let's take stock of how the market, ended the day. We were very, very close to the 24,700 levels before we shut shop. In fact, we were perched at 24,690 on the Nifty, a very range-bound trade coming in. In fact, in the last 3 to 4 sessions, we have been seeing Nifty trading within a certain range, and we ended the day at 24,690 with cuts of 0.2% on the Nifty. Nifty Bank managed to close in the green, was trading with gains of 0.2% or 112 points, but really the shining beacon was the Nifty PSU banking pack, which continues its outperformance, continues to do well. That was trading up 2%. We had a couple of names that were doing pretty well from the PSU pack, like Maharashtra Bank, IOB, Indian Bank, Union Bank. They were all trading with gains of more than 4.5%. Nifty Realty also was a top sectoral gainer, was doing well, trading with gains of 2.3%. Brigade Enterprise was up 7.4%. We also had Prestige. We had a news flow also coming on Prestige, but on the back of that, Prestige was up in a way almost 5% in trade. Anant Raj, Phoenix, they all ended the day with gains of almost 3% in trade. Broader markets is where the action was really. Broader markets continue to outperform. In fact, we did see a Nifty small cap that was trading up 1% in trade, and Nifty mid cap also holding the fort with gains of 0.5% coming in. Special mention to India VIX, that shot up 6.7% today. India VIX was up today. In fact, we saw quite a spike up coming in on that as well. A couple of other names to mention here. Adani Ports was a top Nifty gainer today on the back of an order win and bullish brokerage notes coming in. Adani Port was up 2.4%. M&M, the entire auto pack was also in focus today on the back of the auto sales number that were trickling in. M&M up in a way 1.6%. Tata Consumers, Eternal, Power Grid were the top Nifty gainers. But besides that, there are a couple of other news flows also, Snehi, that was making the headlines.
Yeah, absolutely. Lots to watch out for today, because if we talk about the earnings season, and now we're done with that, but still a couple of candidates that we had over the course of the weekend and Friday post-market. Nykaa was one such stock to talk about. That's FSN e-commerce on the back of an inline set of numbers. The segmental move has slightly missed the street estimates, but you had a lot of brokerage downgrades also coming in. So Nykaa has slipped in today's trading session, and there you have it, more than a 4% cut coming in. The sell-off on that stock intensified in the second half of the trading day. But other than that as well, it was a good day for the FMCG pack, the likes of Britannia, Godrej Consumers. These stocks have done well in today's trading session on the back of the edible oil import duty cut coming in by the government of 10 basis points, which now stands at 10% compared to 20% earlier. So that is something that has done well. Commerce Minister Piyush Goyal has kicked off his Europe visit, and we'll bring you up to speed on that as well. Other than this, you have the new EV policy that has been mentioned today and put into play. So lots to watch out for the auto segment as well. You have the auto sales numbers that have come in, so that impact has been seen on stocks as well. It's a mixed bag coming in, but largely beat or inline set of numbers coming in, with weakness coming in from Tata Motors for the auto sales. So lots of news flow is something that we've seen over the weekend and in today's trading session as well. But to make sense of all of that and more, let's welcome on board Richard Jain, Vice President, Equity Technical Research, Wealth Management at Motilal Oswal Financial Services. And Richard, thanks so much for joining us. Give us a sense of the trading day that we've seen today, and I find myself saying this more often than before now, that it's been a resilient day coming in for the broader end. The benchmarks have been absolutely lackluster today, but a recovery is what we've seen towards the end. What I really want to get your sense on is the India VIX uptick that we've seen today, because we have seen significant cool off over the last week, even when the markets were lackluster as well. So give us a sense of where you are seeing India VIX headed, because a 6.5%, almost 7% uptick is what we've seen today, and what you think the market construct could look like tomorrow.
Yeah, hi, very good afternoon. Well, what we have seen in the benchmark indices since the last 15-20 days has been more of a time-wise correction within an uptrend. Because if you see, the market breadth overall has been positive in this entire consolidation phase since the second half of the month of May. And the important supports of 24,400, 24,500 are still intact. So we believe that this is more of a buy on dip market. Any further declines, if it gets towards the 24,450 to 24,500 in the short term, then that's where the risk reward ratio would become favorable again to create fresh long positions over there. But yes, India VIX, I think there is an uptick because more of a no uncertainty which is there in the global markets or volatility which is there in the global markets. But nonetheless, in the recent events also we have seen that the VIX spiking towards 21, 22 levels, but from those levels it is again getting cooled off. So I don't see the VIX going significantly higher from current levels. But yes, I think the normal new would be now in the range of 16 to 18 or 19. So I think at least in the short term, we would expect India VIX to trade within this range of 15, 16 on the lower side and 18 to 19 on the higher side. But on the index fund, as I said, it's more of a consolidation or time-based correction which is there. Now the market bet, since it is positive, this is the market where one should focus more on a sectoral or a stock-specific approach where better opportunities are seen than the index.
Right, Ruchit, hi, this is Ankita also joining in. So, Ruchit, tell us what are your picks in this market? What are your bullish bets?
There's a couple of recommendations which technically are looking quite positive. One is DLF. In fact, the entire real estate space has gone through a long corrective phase, and off late since last 2 or 3 weeks, a high top, high bottom structure with improving volumes have been seen in the realty names. So DLF, of course, leading this sector, is still looking positive technically. So short-term traders can buy with stop below 790 for potential targets around 850. And the banking and the NBFC space is looking positive, because last 1 month we have seen a good consolidation in the bank Nifty as well as the Nifty Financial Services Index. And in the entire consolidation, both the indices have not yet breached its 20-day EMA. We witnessed a good positive momentum in the PSU banks as well. So I think the entire space, the banking and the NBFC, could see a resumption of the uptrend from here on. So Federal Bank within the banking space, technically the stock has given a breakout from its trendline resistance today, and that too is accompanied by very good volume. So we expect a follow-up move in Federal Bank from here on. Traders can buy with stop below 201 for potential targets around 213.
Federal Bank in DLF looking good to Ruchit. Let's thank Ruchit on that. Thank you, Ruchit, on that note. We'll let you go with that. But while we're talking about technicals, let's take it across to Shrishti, who spotted some stocks for us on the charts today. Shrishti, take it away.
Well, yes, two counters on the breakout side that we wish to highlight today. Firstly, let's have a look at one of the banking majors, and that is Indian Bank. Take a look at the move in the stock price. The stock did touch its all-time high levels in today's trading session, very close to that 650 odd mark. But what was interesting to see is that it managed to break past its June 2024 highs in today's trading session, because you will see that's a big red candle that was formed back in June 2024. Other than that, the stock has tried to move above those levels for quite some time, and it's rather the fourth attempt for this particular counter in today's trading session. It was indeed successful. It was over 5% jump coming in on Indian Bank, and in the FNO as well. We have seen a long build-up happening too. So this is the first breakout stock that we wish to highlight for our viewers. But moving on to another breakout candidate, that too from the financial space, and that is PNB Housing Finance, because you will see that the stock has been under tremendous pressure. This was a breakout back then, close to 880 odd levels. The stock was continuing its up move, but off late it did form a flag and pole pattern for itself, and after consolidating for quite some weeks now, the stock managed to break past that level, taking support at its 20-day moving average, very well supported by a long build up on the derivative side. So these are the two counters that we wish to highlight on the breakout side. Back to you.
All right, PNB Housing Finance and Indian Bank, two of the names on the breakout. Thank you so much for joining us, Shrishti. But let's move on to the word coming in from the wise Shreyas Devakar, who's a senior fund manager, Equity Access Mutual Fund. He believes that the large caps are better valued as compared to the growth estimates. Now, he also believes that the large caps can give better returns if the GDP growth accelerates. Let's go across and listen in.
The large caps are reasonably valued compared to their growth expectation. And if there is a GDP growth accelerates, then large cap can give better risk-adjusted returns. When it comes to mid and small, and this conundrum has been there for last 3 years now. It is not today's conundrum that large cap lacks growth while valuations are reasonable, and mid cap, small cap, the growths are better than the large cap, but valuations have got elevated quarter after quarter. So a 20p mid-small great growth story became 30, became 40 after every quarterly result season. Even in this quarter, the same thing broadly would have happened.
Okay, that's the word coming in from Shreyas Devalkar, the senior fund manager at Axis Mutual Fund. But on the programming note, the beginning of the month often marks key financial activities, salary credits, bill payments, and planning expenses. But just as we plan for our expenses, it's equally important to plan for our investments. To encourage this habit, SBI Mutual Fund, in collaboration with Times Network, is launching a nationwide investor awareness initiative, Bharat Nivesh, Better Kal. The objective of this initiative is to promote the habit of consistent investing among Indians, helping them secure their financial future. As part of the campaign, we are observing the 4th of every month as a monthly reminder to ensure that you start your mutual fund SIP or ensure that your existing SIP continues. So go on and set your reminder to invest consistently and stay committed to your financial goals for the financial well-being of you and your loved ones. But let's take a look at what was happening in the world of derivatives today and the FNO space and how that was shaping up today. India VIX has come in at 17.2, so that's quite the flare-up that we've seen coming in on India VIX today. Let's see if we can see a cool-off tomorrow, because a 6.7%, almost a 7% jump is what we've seen just on an intraday basis on India VIX, close to 17.2. If you take a look at the active calls for 5th June expiry, that's this Thursday, 24,600 and 24,700 is where we've seen call writing with a maximum open interest at 25,000. So that's going to be the next resistance level to watch out for on the upside. But if you take a look at the active put buying that we've seen for the same expiry, 24,600 and 24,500 is where we're seeing some put buying, with the maximum open interest being seen at 24,500. So that's quite the 500-point range that we're seeing when it comes to the Nifty resistance and the support. So it's quite the free float, but still rather range bound, because that's where our markets have been over the last course of the week or so. No major uptick coming in. So that's what the derivative space has been shaping up like today. But let's move away from that and talk about commodities, because that's been yet another tariff threat by US President Donald Trump as he announced plans to double tariffs on steel imports from the existing 25% to 50% effective from the 4th of June to secure the steel industry. The announcement came during a speech at a US steel plant in Pennsylvania, and right after that, his Truth Social post stated that the tariff on aluminum will also be doubled. Let's listen in to US President's announcement on this here.
We are going to be imposing a 25% increase. We're going to bring it from 25% to 50%, the tariffs on steel into the United States of America, which will even further secure the steel industry in the United States. Nobody's going to get around that. So we're bringing it up from 25%. We're doubling it to 50%, and that's a loophole. And
okay, but what does this mean for our markets back home? Let's get Ashesha to break down what this latest tariff move could mean for our markets as well as the global economy. Ashesha.
Well, yes, it was just in February this year that Trump had gone ahead and increased tariffs on steel and aluminium from 10% to 25%, and now this has been increased further from 25 to 50%. Trump says this is to protect the domestic steel industry, but largely on unexpected lines. No one expected this increase from 25 to 50% suddenly. Now, let's also talk about US steel imports then. Morgan Stanley has come out with a report, and they say that this will US imports about 17% of its total steel requirements from the world. Canada, Brazil, Mexico and South Korea, these are the top 4 countries which export steel to the United States. And as far as aluminium is concerned, Canada is the biggest exporter of steel, of aluminium to the US. 79% of imports of aluminium into US come in from Canada. So no major impact as such on India. In fact, we did speak to a whole host of analysts, and they believe that we could see some amount of sentimental impact on prices as far as steel and aluminium is concerned, now that the world will not be able to supply to the US. Supply in the global market could surge, because of which it could come and flow into Indian markets as well. Remember, cheap imports of steel and aluminium into India have been a concern for the last several months, and that could intensify going forward on account of higher tariffs that are likely to be imposed now by the United States, which will now stand at 50%. So yes, supply into Indian markets could increase, because of which steel mills will not be able to increase their prices going forward, and the same applies to aluminium as well, and that is the reason several of these steel and aluminium stocks are in focus today.
Okay, Shesha, thanks for taking us through that. But we also spoke to our expert Aditya Velekar, the Senior Research Analyst of Metals and Power at Axis Securities. Let's also go across and listen into what he too had to say on double tariffs on steel imports and its impact on India.
Here domestically, we are having a safeguard duty which kind of protects our steel imports. And we have seen that steel imports have stood down for India. But at the same time, if we can see on an import parity basis, the steel prices coming from China are almost at a similar level to our domestic steel prices, or even a few percentage point below to our domestic steel prices. And with this increase in tariff, it will further put pressure because the Chinese will increase their competitiveness and will further lower their offers to exports market. So it only increases our competitiveness and our risk for domestic steel prices. Our steel mills will not be able to hike steel mills further from the supported levels.
Okay, so clearly the metals and steel counters, they were in focus in today's trading session. So were other commodities. But I'll also take it across to my colleague Rabinder, who's waiting by with a list of all the other stocks that were in the spotlight today. Rabinder.
Well, on back of Q4 earning, Nykaa is in focus, where company reported revenue at rupees 2062 crore. We saw an uptick of more than 23% year-on-year basis, and net profit also saw a good jump from 7 crore to 20 crore on a year-on-year basis. If we talk about EBITDA margin, then company's EBITDA margin saw an uptick of approx 90 basis point year-on-year basis. So Nykaa's Q4 number was in line with estimates. So back of this inline set of number, Nykaa is in focus in today's trading session. Apart from this, on back of block deal, Niva Bupa is also in focus, where 12% of equity change hand in 11 blocks. So back of this, Niva Bupa is also in focus. Moving to next, on back of brokerage note, Prestige Estate is in focus, where Antique has come out with a note on Prestige, and they have maintained the buy rating and hike target price to rupees 1972, and Motilal also has maintain that buy rating and hike target price to rupees 1938, and Nuvama has also maintained the buy rating and hike target price to rupees 1780. And lastly, FMCG stocks like Britannia, GCPL and HUL is also in focus, where government slashes import duty on crude edible oil and custom duty on crude palm oil, soybean oil, sunflower oil reduced to 10% from 20%. So back of this, FMCG stocks like Britannia, GCPL and HUL is in focus in today's trading session.
Okay, so that's the take on all the stocks that were in focus, but we also had another basket of stocks that were in focus today on the back of their monthly data coming in. I'm talking about auto companies and how they have fared for the month gone by on the back of mixed sales trend coming in so far, with Tata Motors underperforming Street's expectations. Let's bring in Shrishti with the details of how the overall auto basket has performed in the month gone by when it comes to their auto sales numbers. Shrishti.
Well, yes, it's kind of a mixed bag coming in from the May auto sales data. Firstly, let's talk about the passenger vehicle segment. Herein, a disappointment coming in from Tata Motors passenger vehicle sales, because the sales were not just below the expectation, and it's the second consecutive month where Tata Motors PV sales has actually disappointed. It's an 8% decline on a month-on-month basis when it comes to the May auto sales data. But herein, Maruti Suzuki numbers were actually in line to what the street was expecting, but M&M, that was the outperformer. The sales, though they were flat on a month-on-month basis, but the sales have seen a double-digit growth on a YY basis for M&M, and not just that, the management is confident that the sales momentum is expected to continue. Their EVs are doing well, and along with that, they're also bullish on the export outlook as well. Let's talk about the commercial vehicle segment. Here too, kind of a mixed bag coming in. There were not much hopes from this particular segment, but well, yes, Eicher Motors VECV as well as Ashok Leyland, they have managed to surpass the street estimates, while for Tata Motors commercial vehicle segment, yet again a disappointment coming in. But the two-wheeler was the space to be, like we have been highlighting, that this time a double-digit growth was what the street was working with, and this time around Hero MotoCorp, Bajaj Auto, TVS Motors were almost in line to what the street was penciling in. But Eicher Motors Royal Enfield, that surpassed the street estimates this time around, where we have seen the sales seeing a jump of 22% on a YOY basis. So Eicher Motors Royal Enfield sales numbers were were close to 90,000 of units, and that was above what the street was working with. But when it comes to the commentary coming in from the tractor majors, like we have been highlighting that that's expected to be on the positive side, because the companies are highlighting that the onset of the early monsoon actually bodes well for the sales, and they are positive on the outlook. And also the companies did perform very well in the month gone by, wherein for M&M tractors it's been a 10% jump on a YY basis, while for Escorts as well the numbers were almost in line to what the street was penciling in, but the commentary remains positive. So yes, the two-wheelers and the tractors that have surpassed the street estimates, but of course there have been some outliers within the PV as well as CV segment. Back to you.
Okay, Shrishti, thanks for that roundup on how the auto pack has fared in the month gone by. But let's also revisit our interaction with Rakesh Sharma, ED at Bajaj Auto, because he discusses the impact of the global economic scenario on the company. He also touched upon the scope of price cuts going forward. Let's go across and listen into what he had to say.
A lot of moves in the Latin American continent that is really helping us. Asia is also steady. I think the cost environment is steady, though there is a headwind we are facing with the rupee appreciating a little bit, so that takes away. But the cost environment is, with the noble metals being slightly up, but the base metals slightly being down. There are things which are up and down, but overall the cost environment is looking steady. Entry-level bikes, certainly from a top-line perspective, they constitute about 48% of the Indian industry. That is reducing, that contribution is reducing, but at a very slow pace. We will go for market share in this area as long as it is a blue ocean. Currently, it is red ocean, and we find that if we have to optimize growth, competitive position, and profitability, we find that that optimization is not possible in the bottom half.
That's the word coming in from the management of Bajaj Auto. But on that note, we're completely timed out on this edition of Your Trades. Thanks so much for tuning in.